Hey guys, welcome back to another episode of Asset Coach and Tax Strategist. Very excited that you're here. Very excited about today's content, and very excited about today's content. I'm always excited about our content. I love being able to go through these articles with you and just giving my opinion. Maybe I should just change this. I love just giving you my opinion. No, all seriousness. This is really something that is I enjoy doing because I just got at during the pandemic, a lot of the hope or a lot of the blinders I had on my eyes fell off, and I got pissed off. And so the way I cope with this frustration is this. It's this is being able to put out content and give my opinion. Right or wrong, it's my opinion. I don't profess to be an expert. I'm just giving my opinion on articles that are written. I care less where they're coming from. Conservative, liberal, it does not matter. What matters is you and I. You and I as business owners, you and I as taxpayers. What does this information mean? And from my opinion, little old me, just trying to give my opinion, that's all I'm doing. So take it how you want. Subscribe if you want to hear more of this. Sometimes I rant, sometimes I don't. But at the end of the day, this really is. I hate to say it, this is for me. This is therapeutic, and thank you for entering my therapy session. So, all right, let's go ahead and move on to this next episode. MarketWatch.com. The IRS says it's going after wealthy tax cheats. Here's what new audit stats show. All right, cool. So the IRS has recovered $500 million from high-income households. But what about audits on its not-so-wealthy taxpayers? Ooh, remember what we keep hearing. Now, keep in mind, please remember, I do not pre-read these articles. It is clickbait, meaning I look at the title and I say, let's do this episode. Okay, so I am reading this the first time with you. Now, here's the thing. Sometimes I don't go through the entire article. Why? Because at sometimes we've heard enough BS or we've heard enough of this. We know what's going to be written already, right? It's like the subject that you are an expert in or that you're employed with, right? When you know somebody's talking about your area of expertise, you don't have to hear them finish the entire sentence or paragraph. You just don't. You know what's going to be said. And that's kind of how this is. So let's go through this and see. This will be, I think, will be interesting because remember what we keep are being told. People, households that make $400,000 or less will not be audited. The $80 billion going to the IRS as funding is to add IRS agents, improve the infrastructure and the technology and the capabilities of the IRS, which is needed. But they're there to find tax cheats, is what they say. I kind of feel like this article is going to tell us that there's more people under the 400,000 being audited than above. I don't know. Let's see. Is this suspense killing you? Oh, all right, let's do this. After Congress approved billions of extra funding for tax compliance, the IRS pledged it would be tougher. We're going to get tougher on rich taxpayers and corporations while avoiding extra scrutiny of the middle-class households. Okay, first paragraph. This is what we've all been told. New audit statistics hint that tax collectors is indeed combing through more tax returns filed by wealthy taxpayers. That's good. But it's still too soon to say how tough the IRS gets with them, according to tax experts, and it's too soon to be sure that the taxman will go easy on less wealthy taxholds, even if there are encouraging signs. It's the golden question, and there's no golden answer yet. Pete Sepp, president of National Taxpayer Union, a right-leaning taxpayer advocacy group. For taxpayers worth at least $500,000. Now, I don't know what worth means. Is that net worth or is that income? Okay. Certainly the audits are not dropping and would suggest a small rate increase. Audit numbers released by the IRS on April 18 show that the agency was up to doing its 2023 fiscal year, which ran from October 22 to September 23. The figures give a glimpse into an agency it's coming into a lot of money over the next decade after a 2022 Inflation Reduction Act. The laws, 80 billion, tougher law enforcement, and better consumer services at the IRS has been a flashpoint between Democrats and Republicans. The Biden administration agreed to redirect 20 billion as part of a last spring's deal to raise the debt ceiling. All right, here we go. Here we go. Guess what they're going to start telling us? The new IRS wave of enforcement includes a focus on undisputed but unpaid tax debts of households worth at least $1 million. The initiative has already recouped approximately 500 million, according to IRS Commissioner Danny Werfel, who is one year into his appointment. That's $500 million recovered from fewer than 1,000 families of millionaires and billionaires. Okay. All right, there you go. So 1,000 families, fewer than 1,000 families. What's fewer than 1,000? Could be 10. Could be 999. I don't know, right? The IRS is also going after millionaire households that haven't submitted tax returns and is preparing to ask questions to people who may have played fast and loose with the tax rules on corporate jet use. Corporate jet use, okay? All right, who haven't filed a tax return yet. Okay, 2022 taxes haven't been filed. So here's a way to limit your audit risk. File your tax return. File your tax return. Plain and simple. There you go. Because you can file your tax return and still file an amendment if things have changed. Just saying. The new IRS report shows what the IRS has been doing with the high net worth tax returns have already been filed. Indeed, the audit rates on tax returns worth at least 500,000 are nudging higher, according to the new audit data. In the most recent year finalized audit data in 2019 tax year, the IRS has said it subjected 11% of returns with total positive income of at least 10 million to audits. 1 year earlier, 9.9% of these supersized returns were audited. Year before, the audit rate was less than 7%. So that's great. And a lot of this too is because this area of wealthy is increasing. Why? Because inflation and most of these people have assets that have appreciated. So just in that fact, the numbers of this group has increased as well. So the actual focus, and this is why I'm not a big fan of percentages, because the actual number of people being audited could still be close to the same. I'm not saying 1,000 people are audited, but based on the group size growing and the percentage, there may not be an actual increase of people being audited. It could be actually non-inflated numbers, could be the same number type of people, is what I'm getting at. There's a lag in the data because once a return is filed, the IRS says it generally has 3 years to comb through the return. If IRS auditors recommend a change, the taxpayer can agree and pay or dispute the supplemental bill. Nearly 600,000 audits closed in fiscal year 2023 for returns of all sizes recommended 31.9 billion extra taxes, up from more than 30 billion a year earlier. All right, cool. Not bad. 600,000 audits. The newest batch of finalized audit numbers for wealthy taxpayer returns show that they have virtually no movement, but it's a little. Former acting IRS commissioner during the Trump administration said from 17 to 18. In 2020, the Treasury Department told the IRS to audit at least 8% of income tax households worth 10 million. The IRS was moving in that direction anyway. For now, the audit figures appear to show more past momentum than the direct effects of the Inflation Reduction Act. We know that it usually takes 3 to 4 years from money from the government to actually hit. If it's money that's going to the government, we know it's going to be at least 3 years for these funds to actually show any type of benefits, if not 5 years. That's just common sense. It's just common sense. Let's see here. Who serves the Treasury Department under Trump after the taxation? The IRS was viewing 2023 as a year to try hiring up. He said, even as Republicans have seized the Democrat proposal to strengthen tax reform, blah, blah, blah. The new report shows the IRS is working transitional year. The IRS Treasury officials have pledged the households making, here we go. The IRS and Treasury officials have pledged that households making less than $400,000 a year will not be audited any more frequently than historical rates. The audit rate for 2018 on the base rate comes in at households making $400,000. Let's see here. The newest batch of finalized audit numbers for 2019 audit coverage rates are essentially identical to 18, where returns under $500,000. So here's the audit rates for those making $500,000 or less. Okay, 0.2 to 0.4%. Generally, the audit rates for most returns under 100,000 have rarely been terribly high in the past decade. All right, see here. What worries SEP instead of the other IRS audits to hold back taxpayer money? For example, it said no income threshold, or so-called math error notice, where the IRS's taxpayer goofed at a calculation credit. Audit rates kicked lower for households claiming earned income tax credits for lower and moderate income. So that's good. IRS audits 0.8% of returns claiming the credit in 19 down from okay. All right. So let's see here. Those are down. So audit rates are down from 2019 to 2018. By the way, this is not current numbers. These are based on previous tax file. Audits are there's a runway, right? So when you see 2018, 2019, IRS has 3 years, right? So they look at this, they send out information, and then most everything's done through mail with the IRS. So they're not gonna cold call you. They're not gonna send you an email. They're not gonna send you a text message. You're not gonna get a Slack message from them. There's no Twitter conversation between you and the IRS. It's gonna come in snail mail. That's the existence and the reason the U.S. Postal Service exists. Junk mail and IRS. There you go. There's the secret. All right, so the audit connected to this credit have been marred by a disproportionate effect of Black taxpayers. Let's see here. Okay, I'm not going to go into all that. All right, so it actually didn't talk about what I thought it would. I actually thought it would come in and say, okay, hey, you know, we've audited wealthy people where this is how much money we're going to be getting. Pat on our back, great job, knuckle bump. We're doing everything that we said we were going to do. But here's the audit rates for the under 400,000. So we saw that the numbers are still at 0.8%, where the numbers were between 0.4 to 0.8%. So they're still in line. Let's see in the next few years if they stay in line. I'd venture to say we could find articles, and I have seen articles in the past that actually it makes sense for audits to increase when you get to income levels that are lower. And the reason being is that you're at income levels where somebody may not want to hire a tax professional to file their tax return. They do it themselves and they do it incorrectly. Or they deduct things that they think they can deduct that are actually not deductible, or have proof of that. So a tax cheat is a tax cheat. Okay. If you make more money, yes, you're going to hire firms and CPAs and lawyers and all that kind of stuff because you can afford it to try to reduce your tax liability. It just makes sense. Are there going to be mistakes? Of course. What's the cost of auditing these wealthy people? That's what I want to know. What is the cost to the government to audit these people? Because it's a long, remember, they've got counsel, they've got lawyers, and they got CPAs, and they have documentation. In the way the IRS works, you ask a question, you get information. You ask a question, you get information. You ask a question, you get information. What's the cost of an audit? That's the number we don't see, or at least I haven't seen it. It may be recorded. I'm hoping it gets recorded. It should be part of the balance sheet. They come out with a big fact book, tax fact book. I'd like to see what a cost of an audit is. So yeah, we recovered $500 million, but it cost us $400 million. So 100 million gains a gain, right? But was it? Was it? I don't know. I don't know. So anyways, leave you with that. Have a blessed day. See you guys. Thanks for joining. Bye.